What's up YouTube, Alvaro here. Welcome to the Bilingual Stock Market channel again. On this channel we talk about the markets and we do it in English and Spanish as well, so you can pick your preferred language. And in this video I want to break down some technicals, guys. Next week is going to be a very interesting week because the new earnings season is about to kick off on Tuesday when JP Morgan reports earnings pre-market. So I want to break down some technicals. So I want to go over the S&P 500, the Nasdaq 100 and the Russell 2000, which actually had a very solid day in yesterday's trading session, because I want to figure out what exactly happened last week, but most importantly I want to try to figure out what direction the markets could take in the upcoming week. And at the end of the video, I will be breaking down from a technical standpoint 3 stocks that will be on the very top of my personal watch list in tomorrow's trading session. So without further ado, let's get started. And I want to go over, first of all, guys, the S&P 500. The S&P had a phenomenal day yesterday, going up 1.13% and reaching a new all-time high at 4,371 points. And now I am going to pull up here the 5-minute chart, guys, because on Thursday we saw a massive red day in the S&P 500. So what happened? What exactly happened last week? Because on Thursday the media was saying that, that this was caused because of bad news about COVID-19, because Japan announced that they were going to ban attendance during the Olympics and stuff like that. But in my humble opinion, that was not the reason why the market sold off on Thursday. So on Wednesday, we had a decent green day in the market, and the S&P 500 reached a new all-time high on Wednesday at 4,362 points. Now, as of now, obviously that's a former all-time high. But guys, on Wednesday was not a good day for the markets. Only a handful of stock did the heavy lifting during that trading session. I am talking about Amazon, Apple, Microsoft, and Google. And guess what, guys? Those 4 stocks represent almost, and Facebook, and including Facebook, we're talking about a weight inside the S&P 500 of 20%. Those stocks represent 20% of the total market capitalization of the S&P 500. So those stocks did the heavy lifting on Wednesday. They got very overbought and they were due for a pullback. They needed to take a rest. So that handful of stocks decided to take a rest the next day on Thursday, and the sectors that were lagging on Wednesday had also a weak day on Thursday. So we had a recipe for a nice red day on Thursday. The stocks that did the heavy lifting on Wednesday, that are extremely important because those stocks represent a 20% of the total market capitalization of the S&P 500, decided to take a rest. On Wednesday, the other sectors that trade inside the S&P 500 had a negative day, and they also had a negative day the next day. So that was the perfect recipe to have a massive red day on Thursday in the markets. However, in yesterday's trading session, we had a broad rally inside the S&P 500. The 11 sectors that trade inside this index ended up the day in positive territory, including obviously the tech sector, and the sector that led the way in yesterday's trading session was the financial sector, which is also a very important sector inside the S&P 500. In yesterday's trading session, the Russell 2000 also had a very positive day. We are going over the Russell in just a second, the Dow Jones as well, and obviously the Nasdaq 100. So we had a very positive day. So I am going to pull up here the 4-hour chart, and if we take a look at the RSI, guys, of the S&P, it is at 67 points. So it is a bit elevated. We are not yet in overbooked territory. And what could potentially happen with the S&P 500 next week, guys? So in my opinion, this index shouldn't keep on going up. So we have a new all-time high at 4371. So what about the S&P 500 pulling back on tomorrow, on Monday, and maybe paying a visit to 4325? What about the S&P 500 trading sideways for at least 2 or 3 trading sessions, guys? That is going to be very, but very healthy for the RSI of this index to pull back a bit and chill out as well, all right? So if we happen to see some sort of pullback, I am going to be looking at 43.25, which acted as a lower support in yesterday's trading session, and it also acted as a lower support for this index back on July 2nd. So the most healthy thing that could happen with the S&P would be trading sideways within a 30 or 40 point range for a few days, so the RSI can keep on coming down. That would be the most healthy thing in the case of the S&P 500. Oh, but other than that, guys, there is nothing wrong with this tape. We are trading above the moving averages. We are also on a clear uptrend. So the fact that the financial sector led the way in the S&P on Friday, yesterday, was a very positive sign, guys. So the markets looked very, but very strong. And for the most part, the direction that the markets could potentially take is going to depend on basically the earnings reports that are going to start to come out from Tuesday and on. And I believe that if the economy is actually recovering in a very strong way, as most of the economic indicators seem to indicate, so I think that we are going to have a very strong earnings season from Tuesday and on, and I don't see any reason. I mean, we can have some sort of volatility here and there, mostly when big tech reports earnings, but I don't see any reason for the markets to have a massive drop anytime soon. And from a resistance standpoint, obviously, we are talking about the new all-time high of the S&P at 43.71. And when it comes to the Nasdaq 100, this index also went up on Friday, yesterday, guys, because today is Saturday, obviously, and we're going to post this video tomorrow. But in the case of the Nasdaq 100, we are a bit overbooked. We can see the RSI on the 4-hour at 73 points. So this index is clearly overbooked, but there is nothing wrong with the tape. As I just said, in the case of the S&P, we are on a clear uptrend and we are trading above the moving averages, the 50 SMA and the 180 SMA on the 4-hour chart. And this index also reached a new all-time high on Thursday. I said that in the video that we posted last Thursday at 14,891 points. So I would still like to see some sort of drop in the Nasdaq 100, not a debacle, nothing like that, not a huge sell-off. But I would like, guys, seeing the Nasdaq 100 trading within a 200-point range, somewhere between 14,850 points and 14,600 points. I think that if this index can trade sideways for 2 or 3 trading sessions in a row, that is going to be very beneficial, because that is going to imply that the RSI is going to chill out a bit and this index is going to look less overbooked as it looks right now. But there is nothing wrong with the tape in the case of the Nasdaq 100 either. And now I am going to pull up the good old Russell 2000. And guys, I think that for the most part, whatever is going to happen or whatever could potentially happen with most of the meme stocks out there is going to depend on whatever happens with the Russell 2000, which is an index that hasn't done much since early February. And this index has been trading inside this horizontal channel that you guys can see over here on the 4-hour without doing much, guys. Only, bouncing up and down inside this horizontal channel without bursting above the upper line of this horizontal channel at 2,360 points and without breaking the lower support or the lower line of this horizontal channel at 2,165 points. So the Russell has, in my opinion, 2 critical areas of resistances in front of it. So the first very important area of resistance is going to be the 50 SMA on the 4-hour chart at 2,306 points, and then the infamous 2,362 points. So this is an index, guys, that we need to keep a close watch on, because I truly believe, guys, that the second the Russell can burst above 2,361 points, we are going to see a massive rally in most of the meme stocks out there, because most of them are trading in the Russell 2000. So watch out for the Russell, guys, either bursting above 2,307 points, which is the 50 SMA on the 4-hour chart, or finally, at last, and this is going to eventually happen, taking on 2,362 points. And in the case of this index, guys, take a look at the RSI. It is at 47 points. So the Russell looks like consolidating to break out sooner rather than later. And now let's go ahead and take a look at the first stock of this video, Sofi, ticker symbol SOFI. Sofi went down on Friday 1.02%, and it closed last Friday's trading session at $16.45. And this is a very well-known company, guys, because we all know that Chamath Palihapitiya is investing money in this company, and this is and for those who are not familiar with Sofi, this is pretty much an online lender that offers a great variety of services. So they do student loans, they do car loans, they also do investing and trading, and also insurance. So this company is really making an effort to offer a great variety of services, and we all know that this industry, when it comes to loans and mortgages and stuff like that, is a very competitive industry. The short interest of Sofi as of now is 18%, and we got an unusual options activity that came out on Thursday, or I think that in yesterday's morning, and it was a bullish unusual options activity. So that means that someone, or a lot of people at least, loaded up on calls in the case of Sofi. I was actually taking a look at the financials of Sofi, and this is a very, but I mean very, very expensive stock to invest at a long term. This company is actually growing at a very acceptable pace in terms of revenue. However, guys, the total market capitalization of Sofi is $18 billion at the current levels of the stock, and this company made in revenue $621 million in 2020. That implies that this stock is trading, or the stock of this company is trading as of now at 30 times sales. So this is a very, but very expensive stock. A lot of good news have been already priced into Sofi. So that is something that I wanted to tell you. And when it comes to the short interest, I mean, it is 18%. It is a high short interest, arguably. So yeah, this stock is a candidate to be involved in a short squeeze, right? It is not 30 or 35. I mean, its short interest is not at 30 or 35%, which is an insanely high short interest, but anything above 10% is already a high short interest. So in my case, I would like, guys, to take a trade, or to start a trade with Sofi if the stock of this company happens to pay a visit to $14.40 or $14, let's say, right? Approximately. And why? Well, because that price already acted as a lower support for Sofi on 1, 2, 3, and 4 occasions before. So if I happen to pick up some shares of Sofi at $14.50-ish, then my price target is going to be the next important area of resistance for this stock at around $17.56. If I happen to be able to take this trade the way that I am describing it, I could be potentially locking in a profit of 17%. And in the case of that resistance, guys, at $17.50-ish, we are talking about an area that already acted as a lower support for Sofi back on June 29th, but it also acted as a resistance back on May on 2 occasions, and it also acted as a lower support for Sofi back on February 26th. So we can expect the bulls to have a hard time at around $17.62. And if I zoom in here, guys, on the 4-hour, we could make the case, guys, that if SoFi doesn't pay a visit to the $14.50, and if it keeps on pulling up, the second the bulls of SoFi can burst above $17.50, they could potentially fill the gap up to the 180 SMA on the 4-hour chart. So I'm thinking, guys, that SoFi could also be a momentum play, breaking out of $17.50. So from $17.50 up to the 180 SMA, we are looking at a 13% profit. So watch out for SoFi, guys, in the upcoming week, either paying a visit to $14.50, finding a good support over there, and then bouncing back up, or maybe reversing this mini downtrend that we can see over here on the 4-hour, pulling up, bursting above $17.50 and filling the gap up to the 180 SMA at around $20 per share. And the second stock of this video is going to be Virgin Galactic. And what is gonna happen tomorrow, guys, with Sir Richard Branson going or taking that suborbital trip? So Spce went down on Friday 6.62%, and it closed last Friday's trading session at $49.20. And let me pull up here, guys, real quick, the 1-hour chart. And didn't I say this, guys? In the video that we posted on last Wednesday, and in which I broke down from a technical standpoint Virgin Galactic, I said, watch out, guys, for a buy the rumor, sell the news in the case of the stock of this company, and that's exactly what happened. So Virgin Galactic dropped a lot, guys, almost 10% from Thursday to Friday. So now the big question is, what is going to happen tomorrow with Sir Richard Branson's flight? I think that if the flight goes well, we might see Spce maybe finding support at the moving averages on the 1-hour chart at around $48, and maybe bouncing back up and potentially filling the gap up to $61. So if Spce happens to pay a visit to, let's say, $48, and if it finds a good support over there, and if after that it bounces back up and fills the gap up to $60, we are looking at a 20% move to the upside. So watch out for that. And let me zoom in here a bit more. And we have here, guys, arguably a golden cross on the 1-hour. We have the 50 SMA crossing above the 180 SMA. So this could be a very good sign for Virgin Galactic to find support at around $48 and then bounce back up. Another scenario that could happen, guys, and regardless of whatever occurs tomorrow with the flight of Richard Branson, would be Virgin Galactic dropping down to to $43 or $44, I am going to be willing to pick up some shares of Spce. And by the way, guys, this is one of the stocks that I I go over the S&P 500 and the Nasdaq 100, which are the most important indices of the United States stock market, but I also break down